Hello, welcome to Accounting Hub. I'm Professor George Carpin, PhD in Accounting, and our topic today is discontinued operation when the component is held for sale. So we have two uh, situations for discontinued operation. When the component is sold, and we have a video about that in our video description, and when the component is held for sale. Continued operation if a company decides to sell or dispose of a company of their business profits from this discontinued operation will not continue. And we report it when a component of an entity or group of components has been sold, disposed of, or is considered held for sale. And disposal represents a strategic shift that has or will have a major effect on a company operations and financial results. How do we report it? Separately below income from continuing operation. And okay, it is held for sale. How do we do that? We report the income or loss from operation of the component from the beginning of the reporting period to the end of the reporting period, plus impairment loss. And here is our keyword, loss. If the book value of the assets of the component is more than the fair value minus cost to sell. So let's go to our Excel file and just rename it to have the same as you have here. Uh, and our Excel file is free, and the link to download it is in our video description. Let's just fix this small error here. Typing Corporation is the name of our company. So we have here no uh, no separation between continued and discontinued operation. However, on October 15, 2021, Scrapping entered into a tentative agreement to sell the assets of its division. The division qualified as a company of an entity as defined by GAAP. So, okay. Uh, and here is not Jackson. I changed the name of the guy. The guy now called Scarpings. The division was sold on December 31st. So, okay, here we have the first situation when the company is sold. When the company or when the component is sold, we need to add the gain or loss, just like our previous videos. Book value was 4,540,000, and the division contributions operating income before tax was as follows: 2020 335,000, 2021 435, and the income tax is 25%. So okay, let's do it together. The income from continuing operation before tax. So it is the operating income, because this gain on sale of division here, it is of the component that we are discontinued, less 435. This one we need to remove from our income from continued operation. And 2020, the operating income less these results here. So now we have the continued operation before tax. Our tax, 25%. And times 25% here. So the income from continued operation, the sum. And we can work with this income tax expense as a positive number. And then we do the math different here. Operate before taxes less income tax expense. That doesn't matter. Discontinued operation. So okay, income from operation 435, 335. However, on 2021, it is this 435 plus gain on sale of division. And on 2020, we have no gain on sale of division. And income tax expense, the same 25% here. the same 25% here. So the income from discontinued operation, we sum both. And the net income is the combination of continued operation plus discontinued operation for 2021 and 2020. So this is the first situation where we sell our division. Let's check two other situations here. We keep it held for sale. Whoa. And what do we have here? Whoa, the same income statement. However, we are not selling it. So we just delete the gain on sale of division. So I just delete it. So we only change the 2021 net income and income tax expense and so on. And 2020 is the same. And here, what do we have? Okay, now we can see it. We are holding it for sale, and the fair value is $5,210,000. So let's delete it here. What do we need to do? The we don't need this book value here. Oh, okay, we need it. So what do we have here? Our book value is so okay. So we need the impairment test. How do we do that? We compare fair value and book value. Fair value, 5,210,000. The book value, we have it here. The book value 4,540,000. So here we have no loss. We would have a gain here. So if we have no loss, we do nothing. Let's go back to our PowerPoint here. An impairment loss. We only consider it when we have losses. So if we have no loss, income from continued operation will be the operating income less the uh, gain from operation, or here is the division contribution to scrapping operating income. So we deduct this contribution here. 2020, the same operating income less this contribution. Income tax expense times 25% times 25%. And the income from continuing operation, we sum it, we combine those numbers. And discontinued, we only have this contribution here because we have no loss on the impairment test in 2021 and 2020. Income tax expense 25. Income from discontinued operation, we sum it. And net income, we combine continue and discontinued operation. So when we have held for sale and the fair value is greater than book value, we do nothing. We have no loss here. Let's move here, no loss. However, we have a second scenario. So our second scenario here. Okay. Our second scenario, what do we have? Let's delete it. So here, the income and income from continuing operation is exactly the same. So we will keep it. We will only change it here. Okay. So what do we have now? Fair value of the division asset was $3,970,000. So now fair value 3.9 million, book value 4.5 million. So now we have a loss. And how do we find the loss? Fair value less book value. Now we have an impairment loss. And now we need to record it because we need to record the impairment loss. Income from operation of discontinued operation 2021 is our contribution with revenue and expenses plus this impairment loss. So now we have a loss here. 2020, it is only this revenue here. Income tax benefits or expenses. Now we have an income tax benefits here. 33.7 or 33,000 and three quarters. And here the same, but here we have an expense. So here we have income or loss. Whoa, not lose. Loss from discontinued operation 101. And here our income just the same. So here our income on 2020 will be the same for all of the three situations here because we have no impairment. And 2021 now here we need to consider our impairment loss too. Not only the contribution to the operating income, not only the revenue and expenses. Okay, guys, thank you so much. Subscribe our channel. You will be the first one to know when a new video arrives. Like our Facebook page, Accounting Hub by Dr. Scarping. If you have questions or comments, please leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.